So today in this interview, we are joined by LJ, a trader with experience of over a decade. He was in university and ended up finding that he wanted to make some money on the side by trading, and it actually turned out to be his long-term career. So this is LJ's story, and I hope you guys enjoy. So I wanted to bring you on, and first of all, tell everybody a little bit about yourself and how long you've been trading and how you got into trading, LJ.
Yeah, for sure. So, my name's Lockie. You guys might know me as LJ across the space.
Yeah.
Got into trading about 13 years ago now. Back at university, I was studying physics, and then jumped into the market. Whilst at uni, I was deciding what I wanted to do. Right, jumped into trading. I was trading stocks, futures, and then jumped into currencies, commodities, and trading a bit of options, that kind of stuff. Jumped into the market there. It took off, and then I didn't look back pretty much. So
And
just
how
kind
long
of
did it
followed.
take you? How long did it take you from like obviously first finding out about trading to then take it full time and start actually earning money properly from trading?
Yeah, so I was probably a bit abnormal in my first couple, sort of 2, 3 months. I made a good cleanup from trading. So I'd previously made a bit of money from odd jobs here and there. I made a bit of money gaming, that kind of stuff. You know, Dota competitions back in the day. This is back 2012, 2013, that kind of stuff. Halo as well.
Yeah, oh,
Uh,
Halo.
COD, that kind of stuff.
What a
Yeah, yeah, yeah.
game. Are you making money from Halo?
Yeah, so I played a lot of private competitions around that.
No
You just pick
way.
up like, $200 here and there. I
Yeah.
was, I was like 18, 19. So back then that's like a good bit of money. And then I was at uni and I thought, okay, not sure what I want to do as far as university. I'm doing a lot of heavy math, statistics type, courses, that kind of thing. I
Yeah.
got a little bit of money in my back pocket.
Hmm.
What do I want to do with that going forward? So obviously, the thing people do is once you've got a bit of money on the side, you want to invest that, get it to build, that kind of stuff. So I figured, what better to do than that? Whilst I think about what I actually want to do as far as a career, that kind of stuff going forward. So I went and did that and started learning about that stuff. Once I started learning about it, I jumped into the market, and then I found that I had a good intuition for how markets worked, um, operations of things, and I started very quickly cleaning up some good returns. And then at that point, I was thinking about, okay, do I go back to uni? Do I still want to keep studying, or do I just keep pressing on with this? And at that point, I figured I just keep pressing on with that. I had my, I was that allowed me to have a future to look after my family, that kind of thing. I had my father passed away when I was younger. I was about 11 years old, so that gave that entry towards that, and I just kept going on
Mm.
with markets ever since. So now it's been a good 13 years total.
Oh,
Uh,
13.
it's-
I thought it was only 10. I thought it was
yeah,
10.
yeah, yeah.
13
No,
years.
13. Yeah, yeah. Long time now.
Wow.
So yeah, end 2012 and through
Mm.
2013, where that was sort of the transition period of really doing that stuff. Um,
You've seen quite a few different types of markets as well, like different market cycles and different types of, obviously, crypto bull run 2018, and then you had 2021. So
and
you've been around the block.
early 2013 as well. 2013, back when
Wow. I wasn't part of that.
around 50 $60 on Bitcoin, right? And we had that first
Wow.
about the 240 kind of area, and then charged on from there. So I got the back end of the, say the Draghi, we'll do whatever it takes for the end
Yeah.
of the GDP. And then beyond that, the initial crypto early days, first bull run.
ICOs and stuff like that.
And then we went into, say, Brexit, and we had the
Mm.
administration. We had the with the QE tantrum as well, and then coming into 2019 and then 2020 with obviously
Yeah.
pandemic coming out of that. Then we have inflation, all that kind of yeah. So I've been through a number of cycles in between there, and there was a number of stumbling blocks in between as well, which didn't fully come through, but the market was looking for. But those are the main ones in between.
It's interesting. So I've got a couple of questions going off that. First of all, I take it the first types of bull markets or big events that happened, you probably didn't. I don't know. You tell me. But were you able to properly position yourself in order to take out as much as possible from the market, or only after that you were in a couple of those events and you got a little bit of experience on your belt, that's when the later ones came around, and then you really took advantage of the market? How did it go as a newcomer coming into those times?
Yeah, so I would definitely say so. First coming to the market, like I never came into the market trying to make money per se. I was just trying to make a bit of side buffer or building up equity over time. I wasn't directly trying to you know clean up 10 grand
Yeah,
here, 100 grand here, $1 million, or make a Lamborghini in the next six
yeah.
weeks, that kind of thing. So it was very much a side thing, just a long term putting money away. So when I did have that success, I was very much questionable, saying, okay, is this out of luck? Is this chance? Did I just get on the right side of things? What's going on? And when these events came about, I was very much looking at it going, okay, I've never quite seen this before.
Mm,
I very much, looked at things, analyzed things, but I definitely tended to sit on the sideline going, I've never actually been active in these kind of elements. I can
mm,
observe the past stuff, what happened, whether it's the GFC, the dot-com bubble,
mm.
1987, all that kind of stuff. You go right back, right? You
Yep.
can challenge all those things, but
Depegging of the Swissy euro as well,
yeah, no, that
2015.
that I do remember. I was at the gym at the time. I was training chess that day, and
Yo.
pulled out my phone and went, "Wow, what's going on?" And that was those kind of days where, prior to that, I hadn't really experienced like those really big moves that could blow you out,
Yeah.
right? And fortunately, I wasn't a part of that. I didn't have any positions on that day, but I did recognize that if I was in that, even with just the slippage and getting stopped out further, that would have blown out my account the day entirely. And there were so many firms that have been around for over a decade, which lost 100 mil, 200 mil, 300 mil, and they were done in
Yeah.
one go.
I'm
There's
kind of
nothing they
glad I
could do.
wasn't a part of that, because I know I would have been in a trade on something silly like the Swissy
Yeah,
euro
yeah,
at
or
the
trying to
time.
pick up the bottom and trying to, yeah,
Just
yeah,
trade in
yeah,
the range, as they say,
yeah,
and it would have
yeah.
wiped me out 100%. Oh, that's interesting. So that's interesting. When did you start getting into to the rhythm of things and like finding your edge? Because I know you said about intuition, and obviously intuition is super important. And we'll get on to how much you feel intuition is important to edge and things like that. But when did you start coming around with your type of way of trading, your strategy? Because I know the types of ways that you trade. And were you
Mm.
always trading like that, or was it just slowly doing stuff, working, and then adding as you go along?
Yeah, so it was a blend of things. At first, I wasn't, I was sort of just testing things, like just trying to find out how the markets worked. I started out first trading stocks and futures. Then,
Yeah.
from futures, I went to gold. Once I was trading gold, I found like, okay, you can trade CFDs, which is a lower commission.
Mm,
And with that, I went, okay, you can trade currencies, and then went on and further and further. So I kept expanding my knowledge that way. And to be honest, it was more structuring it initially around everything else I was doing. So because I was young, it was just a side project. I was just wanting to invest my money, just
yeah.
do pretty all right. If I made 10% or 15% after an entire year, I'd be happy.
Mm,
I found that I made significantly more
mm,
within a month, 2 months, and that sort of kicked on. Um, so I kind of just went with what I actually knew, what I understood. So the things that I had no idea about, I wouldn't touch. But if I understood it, I would jump into that happily.
mhm.
So particularly, Aussie dollar was a big one, and this was around post GFC. At the time, the Aussie dollar was still around 97, 96 cents to the US dollar,
Yep.
which is clearly very overvalued. This
Mhm.
is also the same time where gold was pressing about 1700, 1800 per ounce just after the GFC, and
Look at
we're
it
definitely
now.
going to see it come down. So the same way, I rode both of those down just on a fundamental basis, and that's kind of where I started, like going, okay, is this realistic for this asset to be trading at this level. And the same thing with the stocks. I was trying to just view them very much like, okay, there's this company. How much does it make? Where does it make its money? That kind of thing. So the same way when I first started trading stocks, I started buying certain stocks that were making money overseas in USD, right?
Mm.
Because the Aussie dollar was very overpriced.
Yep.
They would bring that money back, and then the Aussie dollar was set to move lower. So it was
Hmm.
just these basic fundamental principles like that. And I guess I happened to be very much on the mark with those kind of things. That accelerated. I made that money, and it sort of hooked me in, and I kept going from there, pretty much.
Nice. So if we were to talk about like your playbook of how you would look for setups like that, what does that look like from, the an idea standpoint? If you're looking at now an asset or a stock or absolutely anything, what are the steps? What are the things that you're looking at on a fundamental technical standpoint?
Yeah, so I'd say like day to day, my executional outlook is very much technical, right?
Hmm.
But I always have the fundamental and macro kind of backdrop give me kind of confidence in those trades, right? So
Yep.
I would look at the market structure that we currently have and then cross compare that to the overall macro and fundamental outlook, whether it be the central banks, the data that's coming through,
Hmm.
jobs numbers, CPI, that kind of stuff, right? And give me a lean per whatever currency, if we're talking about a currency that
Hmm.
we're trading, and the cross comparison relatively between them, right? So
Hmm.
that's kind of the standpoint where I'd come from. I'd try to pick up as much data that I can actually get as
Hmm.
far as a look through point. But at the end of the day, the technical structure is probably going to be your best bet to really lean on intraday in particular. So
Yeah, I 100% agree. I think obviously the fundamentals are super important, but when you're on a 1 minute, 5 minute chart, really you just need your levels on a bit of momentum, market structure, all
exactly.
of those things. I think those are super important as well. And tell us how you got into prop then. So this is all of this stuff. This is without prop. This is personal money,
Yeah,
personal
long before.
accounts. Risk is full risk is yours. Very different to what we've got today.
Yeah, yeah, exactly. So I started long before any of the modern prop firms that everyone talks about
Yep.
existed. So had my own money that, like I was saying, I'd saved up from various odd jobs, and then also some, a bit of gaming, winning some competitions, that kind of stuff in the past, and then deployed that. Um, since then, kept building it. Eventually, later, I sort of discovered the prop
Mm.
side of things. This was about 2021. I
Yeah.
thought, oh, this is cool. This makes sense. I was just, I happened to stumble upon it just completely accidentally, right?
Yeah.
Then jumped into the space. I was like, okay, it expands your capital. Um, it's the same field as what I'm doing. It's a no brainer, right?
Mhm.
You're paying X amount to get X amount of capital, and you can work that through. Absolute no brainer. So that's
Mhm.
kind of how I got into the field. And from them, it's kicked on. Obviously, the space in general has grown massively. It's a massive, massive,
Huge,
massive benefit to anyone starting trading now.
huge
Like I did
benefit.
not have that at all 10 years ago.
Mhm.
Right? You'd have to gather every single little bit of capital yourself, which is a massive benefit to anyone starting out now. So definitely take advantage of it. It's a
Yep.
huge boon, and yeah, you can really set yourself up with this stuff.
What do you think the pros and the cons with trading prop then? Because obviously you've got a lot of people are exclusively prop firm traders these days. They will
Yeah,
only trade prop. But you obviously coming from, trading a personal account, growing a personal account and living off just your personal account and now supplementing with prop firms and things like that, you probably understand the pros and the cons as well. So what are the pros and the cons for you when it comes to prop firms?
I would say kind of treat it like almost view the thing as like a whole business, right? So both your own personal accounts are part of the business, and the prop accounts are also part of the business, right? And they're
Mhm.
just different revenue streams under the same business in
Yep.
totality, right? So never want to have every single thing of your business right? You don't want to have it
Mm.
100% set on this one piece. And if that fails, your business is done,
Mhm.
right? So, in that same way, with the prop stuff, level that up, also level up your personal accounts as well, and have them in tandem with each other, have them
Yep.
balancing out. You'll be able to trade the prop better as well as trade your own better once
Mhm.
you know that both of them are leveling each other out. You're not entirely dependent on one or the other, right? And they complement each other and they can grow together.
Mhm.
That would be probably the best way to do it.
Mhm. Do you feel like, I don't know how you are, what are your rules like and the way that you look at it, but prop firms, have drawdown levels, they have rules around news, and they have these different things that some traders think that they don't like it. It holds them back from their true potential. It does all of these different things. It's there to make them blow up, or all of these different things that a lot of people would say. What are your thoughts about the kind of risk and the structures around prop? And be totally honest. Yeah, it doesn't mean just because you're here with me and we're pals as well, so you can tell me everything. Just
Yeah,
tell me
no, for
like
sure.
what yeah, like what do you think to the rules and everything on prop?
Yeah, so the thing you always got to remember with any kind of with the prop rules, right?
Hmm.
They're first and foremost a business in and of themselves, right? So
Yeah.
they're allocating you capital to go to the market, right? So
Mhm.
they have to have certain rules and structures around things because you're aggregating a mass amount of peoples, right? With different trading strategies, different trading styles, different stops, different lot sizes, different assets, the whole thing. And they need to aggregate that all together. So it
Mhm.
has to be some kind of aggregation that they can put certain guardrails between things so the firm in the background does not blow up,
Yep.
right? You operating by yourself, you can set your own rules, your own parameters, and might be a bit deeper. They can't because they've got such a mass aggregation of tens, hundreds, thousands of people to try and coagulate all together at once,
Yep.
right? So it just makes sense. They're also trying to run a business. You're not trying to make a crazy amount in one day. You're trying to just gradually, incrementally compound day to day to day to day. And that's how a firm is going to work. So
Mhm.
completely makes sense around their parameters. And if you worked at any traditional prop firm, a bank, anything like that, they have the same rules, the same regulations, the same standards, the same expectations.
Same
You just
drawdown levels.
incrementally, yeah, just incrementally, gradually increase. Your profits. They'll give you a certain amount of capital. They want that gradual, steady, incremental
Yep.
increase. You're not trying to break the Bank of England in one day, right? That's a
Oh,
completely different game,
George,
right? That's
yeah,
not what we're here to do.
we're not rolling with Soros. We're not on
No,
those levels just yet. But it's
that's not a day to day thing. That's a
no,
very exceptional thing.
once in a
Day to
lifetime type
day,
of thing.
they themselves don't do that day to day, right? They're just trying to make the gradual, incremental, compounding growth every single
Yep.
day, and that's what a firm is looking to do as well. And that's what you should do as an individual. Look to do because if you do
Yep.
that, the profits will take care of themselves.
I think people need to look at it as well in a little bit of a different way. And the way that I like to look at it is, at the end of the day, the firm has to take the bet on the trader. Like you're a trader's taking a bet on the market on a specific direction. They have, you have a statistical edge, and you work with, the numbers that show that you're profitable with this particular setup. It's the exact same, the firm and the trader. The firm takes the bet on the trader after the trader can show that they can actually trade well. And the rules there, one, help the firm actually find who's the good trader. But once they are taken out to the market, if they've got a positive profile and they've been trading a little bit on the funded account, and the firm can properly take the bet and take them out to the market properly, well, the rules have to be in place because you don't want to blow up all of that money. So I think even in traditional desks, they have daily risk allowances. You don't have a
Yeah,
newbie that comes in, they do all their training, they do all their onboarding, and then you go, okay, there you go. You're driving the car with no seatbelt. No, you've got somebody with you, a risk manager, somebody that's saying you can only risk this much. And if you go against that, then there's obviously repercussions. And the exact same thing with prop. I think because it's in the retail space, and a lot of people coming in here maybe taking it not as a career, but as a way of just making money and making money fast. I think they don't really understand the underlining premise or just the structure of how prop firms actually work. And once you actually really
Totally.
understand how they work, then you can feel better that the fact that there are rules and there are frameworks and they're there not just to protect the trader, but they are mostly there to protect the firm and to show that the trader is actually any good. So it is really, really, really important. But what would be your tips then? Because I don't want to go on to too long about all of this stuff. But what are your tips to the new trader coming in that maybe he's in university, doesn't know what he wants to do, found a little bit of prop trading and decides to give it a go? What is your advice?
Look, I would say steady and gradual beyond anything. If you
Mhm.
just take it as this broad approach, don't have expectations, see what you can do, play around, experiment, maybe sometimes dabble in a little bit more risk. See how that feels. See how you can handle it. See if you get, if you get scrapped immediately, you go, okay, you got your hands burnt, right?
Yep.
Pull back and
Mhm.
then retest a little bit from there, right? So
Mhm.
experiment, experiment, experiment. Treat it as like exactly that, a science experiment,
Experiment.
like you would do. You go with a hypothesis, you
Mhm.
take that hypothesis to the market.
Mhm.
Instead of get a scientific result, you get
Mhm.
a financial outcome,
Mhm.
right? And you just keep doing that, reapplying, 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 and you get better and better at figuring out how the market works,
Yep.
whatever market you choose to delve into. And then over time, it will progress and progress and progress. But don't try to come in here sweeping up, trying to clean up everything in one go. It's not going to work.
Yeah.
Take a steady approach and compound that thing over time. That's going to be your best bet. The same way that if you went to university, say you're at university, you won't expect to go and study for 6 months and completely learn a degree in that one span. There's a reason you do 3 to 5 months learning the degree. You need time to condense, to take it in, for it to settle, and
Mhm.
then keep going forward, right? So the same thing with the market, with money, that kind of stuff. Take a steadied approach,
Yep.
let it compound gradually, and you'll make it.
I think going off that as well, if you do it the other way and you try to get as much money as possible in the market straight away, I can promise you from experience, it takes you a lot longer to actually
Yes.
be profitable and get good because you can turn up to be a boom and bust and you're always chasing your tail until you're a little bit less boom and bust. And talking from just a person that's been boom and bust, I've been booming and busting for a couple of years. It's only recently that I've been stopped being too much boom and bust. But that is
Yeah.
a big thing because everybody comes into the market, they see that you can make great money, and that initial. There is a thing with trading within it comes a little bit of beginner's luck as well. When you
Yeah.
first start training, sometimes it just something happens and you're just making money, and that's what hooks people. If you went in and you just blew your money straight away, then you're like, oh, I'm not doing that again. You get
Most people
burnt straight
quit. Yeah.
away. Yeah, but it doesn't actually happen like that. Like, you do get lucky and you start, you could have like a week of just, you know making money, and then afterwards, that's when you start chasing. That's when you actually blow up, and then you have to go through that process of every trader of actually learning not to do it and learning what you need to do. So it's a proper journey, to be honest. And you've done it as well. So, LJ, thank you very much for joining us today, and you're going to be on some of the live trading rooms as well.
Definitely.
I hope, yeah. And where can people find you? Have you got social media yet? Have you got anything? Have you
We'll
got
get that scrapped up. You guys will have to come and join the live trading streams, and then you'll find out where you can find me.
Great?
We'll scrap it till then.
Yeah,
In the meantime, I would say keep it steady, compound gradually. Don't be trying to make everything up all in one go, and you'll do well. So that
yeah.
would be my number one.
Great,
Educate yourself.
fantastic. All right then.
Yeah,
Thank you, guys. Thank you very much for jumping in to LJ, and anybody that's watched it and take a little bit of value. Let us know in the comments that you liked it. Also, going into the other interviews with other traders like Stephen or Gary Langley or even Will. And we'll see you soon. Best of luck, traders.
Peace.